Joining us now from London is Daragh Maher. He's Deputy Head of Global Forex Strategy at Agricole. He's a Bloomberg Best, one of the most accurate forecasters on currency. Daragh, good to talk to you. Euro under a lot of pressure today. Why wasn't the word default discussed in those meetings?
I think they're just scared of the D word, aren't they? It's one of these weird things where they feel compelled to say, look, we're not even talking about it as a risk case, as though in doing that somehow reassures us. I think in a way we'd nearly like them to be talking about it, so we would recognise, well, if, in the very unlikely event that it were to happen, they were kind of prepped for it. I don't think it necessarily provides the reassurance that they imagine it should do by saying it wasn't even a talking point.
Right. Well, considering that the market's telling us there's near certainty that a default will happen, you would expect perhaps an outline of what that would mean to be discussed, no?
Yeah, I mean, you'd like to think that, look, to be honest, I imagine they do have a plan B in mind. They'll have contingencies in place. But the tactic in terms of the rhetoric, I think is slightly misguided in terms of they want to say, we're not worried about, not that we're not worried about it, we don't even feel compelled to talk about it, which is, I don't think anyone out here listening to that could actually believe that that's the case. Or if it is true, I think we're scratching our heads saying, well, why aren't you talking about it when the market is attaching such a high probability to it?
Mm-hmm. And you point out that it still seems to be unresolved just whether collateral's involved in the next loans or in next round of packages. I mean, what is the biggest headline risk for you right now?
Well, to be honest, I think the biggest headline risk is delivery of change, delivery of policy. Look, we've had a lot of promises made back in July. We're still waiting on them to be delivered middle of September, and the indications are we're going to be into October before we get that. The collateral issue, there was hopes that it would be resolved the weekend gone. We've not got that either. In fact, we got nothing this weekend gone. So, it feels like the markets are operating on a very different timeline to the politicians, and when you got that mismatch, markets will continue to suffer.
Well, we did see the dollar up, particularly earlier today, on some of those worries. How do you trade the dollar going into these Fed meetings midweek?
Yeah, I mean, I think, to be honest, I'd still be buying the dollar. I suspect, the main banana skin for the dollar going into the Fed would be if they were to announce QE3. I think it's more likely that they do this Operation Twist round 2, in which case they wouldn't be adding to dollar supply, and I think the market would be quite relieved about that. So I think there might be a bit of a dollar bid there. Plus, the overall backdrop is still very nervous. You can't buy the Swiss franc because it's curtailed by the SNB. You don't want to buy the yen because it's potentially curtailed by intervention. So you're left with the dollar. So I think the dollar bid remains quite lively into the Fed.
You think the kind of nervousness that we've seen in today's market is going to continue throughout the week?
Throughout the year, I imagine. Yeah, it's last week we had a bit of a respite because we had coordinated policy reaction on dollar funding for European banks. It was unexpected perhaps in terms of its timing. But yeah, if we don't get anything big this week, the market, I think the default, if you like, the market is just to get twitchy, and I think we're still there.
Daragh, we've been talking about that prospect of defaults for over a year now. So, I mean, how much more adjustment actually needs to be happen? What's the black swan scenario for you that the market's so nervous they don't know yet about?
Oh, well, I think one of the great concerns is if we end up going down the default route, as many people's risk case would have that, it's the unknown effects of that. We saw it post Lehman's, and I think there's still that same kind of, that's the black hole effect. We're not quite sure how it plays. And, I think, that is the concern. That's the concern for policymakers. They'd love to plan a solid contingency for it, but how can you when there's so many unknowns on it? And that's the difficulty.
All right. Daragh Maher, Credit Agricole, thanks for joining us.
Cheers.
Perspective on Europe and the U.S.